Okay, just now we talked about the sales ledger control account, and now we move on to the purchase ledger control account. So under the purchase ledger, it will consist of the trade payables. Okay, so a purchase ledger control account is called the total trade payables account. Okay, or sometimes we can call it the trade payables control account. So basically, the purchase ledger control account or the total trade payables account will record the total of the trade payables. Okay, so it represents all the trade payables in the purchase ledger. Okay, total. Okay, in totals. Now, closing balance again is the same. Closing balance in the purchase ledger account will equal to the total trade payable balance. Okay. Okay, this one, prepare the purchase ledger control account in the general ledger from the following. Okay, take note the control account is in the general ledger. Sometimes we call the nominal ledger is the same thing. Okay, nominal ledger. Okay, total credit balance. Because this is a purchase ledger control account, it is a summary of all the trade. Maybe I'll just use creditor for simplicity, okay? Because a purchase ledger control account is a summary of all the creditors, okay? So they will have the same nature as the creditor account, okay? So for them, their normal balance will be credit, okay? This is their normal balance. Their normal balance will be credit. Your normal balance will be credit, okay? And then what it means is that credit will signifies increase, okay? Whereas the debit will signify let me paste this one. Copy paste. Paste it off. So this one. Minus, okay? So as I said already, this is like a creditor's account. So a creditor account normally have the credit balance. So what it means is that credit is increase and debit is decrease. Okay, so let's do it together. Total credit balance on 1st January 2019. Okay, so this one is wrong. Okay, so it should be 2019. So this is 2019, okay? So the first balance, opening balance, January 1, balance BD, okay, on the credit side because the creditor have a credit balance, 3,500 now. Total credit purchase for the month, 4,500. You just think of the double entry, okay? Credit purchase, okay? So you purchase, for example, from Ali. So purchase debit and this one the Ali or the supplier will be credit. So you write here purchase 4,800, okay? This one you will write 31st, the last day, okay? Purchase the last day, okay? Purchase 4,800. When you do this, you just try to think of the double entry. What's the other account? Then you'll know whether to debit or credit over here. Check paid to the supplier during the month, okay? So you pay to supplier, so bank out supplier in, okay? Because the creditor are the supplier. So bank credit and supplier debit. Bank credit, supplier debit. So bank 3,500. So over here you write the January 31st. Oops. Okay, only the opening balance you write January 1. After that, discount received in that month $80. Okay. Now discount received is income account. Okay. So income account has a credit balance. So this one discount received will be credit and this means that this one will be debit. Okay, discount received. How much is it? $80. Okay, and now purchase return to supplier during the month. Okay, one trick to remember this is that purchase return, purchase return is because when you purchase and then you return, it's called the return outwards. Return outwards on the credit side, okay? So return outward on the credit side here, it will be on the debit side. Return outward credit, and this one supplier will be debit. Purchase return 200. So as you can see here, as I said, this is a plus, okay, increase. So when you purchase from the supplier, you increase in the amount you are owing to the supplier, the creditor, okay. Now, if you return the damaged goods, okay, it will reduce the amount you are owing to the creditors, right? Can you see it? Okay, so now next step, you are going to close the control account. So what's the steps to do it? So number one, you have to compare both the debit and the credit side. So use the calculator, add up all this amount on the debit side. How much is it? It's 3780, okay. And now you use the calculator and add out the amount on the credit side. Amount on the credit side is 8,300, okay. So now if you compare these two, debit 3780, credit at 300, so which is bigger? Leave a blank here, okay, leave a space here. So which is bigger? 8,300 is bigger, right? So you draw the sum, the line for the sum. So draw the line for the sum. Okay, so draw the line for the sum. A bit slow in this. So okay, on both sides it has to be on the same line. Okay, so you write the bigger amount over here, which is 8,300 on both sides on the same line. This is the total, okay? So 8,300, so this is the lesser side, okay? So the balance is how much? 8,300 minus off all these 3780. How much is the balance? The balance is 4520. So you insert the balance carried down on the side which is less balance, carried down, okay? And this is the last step already, and then balance brought down on the opposite side, balance BD on the opposite side, and this is 4520, okay? And then you write the February 1, okay? So that's it. So how do we interpret this? You see, as I said already, purchase ledger, this is the creditors, just like the creditor account. A creditor have a credit balance, so you see a credit balance. Almost always they have a credit balance, as you can see here, the credit balance. So here also you can see the credit side is bigger, so it's a credit balance. So this one minus this one, we still have 4,520 on the credit balance. It means to say the amount we owe to our creditor is $4,520. Now these are the source of information for the purchase ledger control account, okay. It's somewhat like the opposite for the sales ledger control account. So when you pay to them, bank out, and then for the creditor, they will have on the debit side, because bank creditor will be debit side, okay. Discount receive, you just think of the discount receive is an income, so it will be on the credit side. So here it will be on the debit side. Purchase, when you buy from the supplier, debit purchase and credit the creditor or the supplier. So credit over here is the purchase, okay. And now when you return, when you purchase, you see it increased the amount you owe to the supplier. And now when you return back to the supplier, because there's damaged goods or maybe it's not what you order, so you see when you return, it will minus the amount you owe to the supplier, okay. Or you can think of it this way: purchase return is return outward. Outward is on the credit side, so over here it has to be on the debit side, and then contra is always on this side. Okay, so now this one you can read it by yourself. Okay, this one I will not go through again because it's the same as all this. It's just I rewrite it again because this is important, okay, for this topic. Now reminder, record only the cash discount, not the trade discount. Okay, I'm not sure if you still remember the difference between the cash and the trade discount. Okay, but the trade discount only shown as a deduction of the list price, and the cash discount, when you see the word discount allowed and discount received, it refers to the cash discount. Okay, so over here you see discount received, discount allowed. Yep, you record it here. These are the cash discount. Record only the cash discount. So this one, discount allowed and discount received, they are the cash discount. Sales ledger control account is not sales account. It's not sales account. It's more like the total of the debtors and the total of the creditors. Okay, sales. So if purchase, then is the total creditors account. And one more thing to note over here, I did not write it down, but please take note that you do not include the cash sales. Okay, cash sales, because cash sales to customer, then it will already be in the cash book, but this one is called the debtor because you sell to him on credit. Okay, that's why it's credit sales. So you do not take note, you do not I'll just write off this here. Do not include cash sales or cash purchase or cash purchase, okay, because this is about the credit sales and about the credit purchase. Okay, so control account contain all the trade receivables in sales ledger, all the trade payables in the purchase ledger in the total, so they are included in the general ledger to take the price of the debtors and creditors, because these are already moved to the subsidiary ledger, and to make the trial balance in the general ledger complete and self-balancing. Okay, the balance in the sales ledger control account is the total. So sales ledger control account is the total receivables, and the purchase ledger control account is the total trade payables, total trade payables, okay, total trade payables. Okay, so these I will not go through again. You have a read by yourself. Okay,